Why do we have to pay so much in taxes? Personal income tax, capital gains tax, business tax, property tax. There are over 10 different types of taxes to pay. In Australia, the highest personal income tax rate has reached a staggering 45%. Nearly half of what you earn goes straight to the tax office. For the average person, there aren't many ways to reduce their tax bill. But the wealthy, they can pay less tax or even no tax at all. Take Warren Buffett, for instance, who pays less tax than his secretary. Or Jeff Bezos, the former richest man in the world and the CEO of Amazon, who doesn't pay income tax at all. Elon Musk saw his personal wealth skyrocket in recent years, all while paying no taxes. On average, the wealthy in the United States only pay 3.4% in income tax. In Australia, those earning over $1 million Australian dollars a year don't pay a cent in income tax. So why can the rich avoid paying taxes while we, the average people, worry every year about our tax obligations? It's because the wealthy not only know how to make money, but also know how to keep it from the taxman. I don't know about you, but I wouldn't say I like paying taxes. Of course, if you enjoy paying taxes and see it as your social responsibility, if you believe paying taxes is noble, then this video might not be for you. But if you, like me, don't like paying taxes, you should watch this video to the end. I will explain 7 methods to reduce or even avoid paying taxes legally. If you learn this, you can keep more of your money, just like the rich, and prevent the taxman from taking it away. Hey there, my name is Alex. Welcome to my channel, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Number 1. Stop earning any income. If you want to pay less tax or no tax at all, the first thing you can do is stop earning any income. This is one of the most common methods used by the wealthy. In Western countries, including the United States and Australia, the tax base is income. If you can prove to the tax office that you have no income, then you can avoid paying taxes. If you're an employee, it's a bit difficult to show no income on paper. The wealthy can show no income on paper because they don't earn money through employment, but through running businesses, investing, and holding assets. For employees, your tax base is your salary. The tax is deducted before the money even reaches your hands. Then you use the after-tax income to buy necessities, pay bills, and every time you make a purchase, you pay an additional 10% goods and service tax. If you run a business, the tax base is not the business income, but the pre-tax net income after deducting expenses. If your business income is $100,000 and your business expense are also $100,000, then you haven't made any money this year and don't need to pay taxes. Do you see the differences? One is taxed before the consumption and again during consumption, while the other consumes first and pays tax on what's left. If you own a company, at the end of each year, your accountant will urge you to spend some money. Buy a car, a computer, bags, book a business trip, get a few business suits, purchase professional development courses, and so on, all to save on taxes. If you're an employee, you might also need to spend money in these areas, but if the company makes these purchases, then these expenses can offset business income, thereby reducing taxes. If your company spends money, it doesn't have to pay taxes. It has to pay 25% in business tax if it doesn't spend money. So the government is actually encouraging businesses to invest in themselves, expand, and lay the groundwork for future business development. The method of encouragement is tax reduction. For individuals, the government doesn't provide this encouragement. Whether you spend your money or not, the tax office has already collected the tax on your salary. They don't care anymore. So if you think about it, the government essentially uses taxes collected from employees to subsidize business development. So if you can establish your own company entity and collect your employment income somehow through running a company, you will immediately find that you can keep more money each year and pay less tax. Number 2, use debt strategies. The second method to pay less tax is to use debt strategies. The best example of this is Elon Musk, the world's richest man. Musk doesn't draw a salary from his work, so he doesn't pay taxes. But that doesn't stop him from being the world's richest man. Some might ask, if Musk doesn't take a salary, doesn't make money, and doesn't pay taxes, how does he cover the daily expenses? Don't food, clothing, housing, and transportation all cost money? Surely Tesla can't cover all his expenses. Well, Musk uses a debt strategy. He is one of Tesla's largest shareholders. Years ago, Musk invested in Tesla and has since continuously received stock options as performance rewards. These stocks have soared in value from their initial $6 to $400. Musk's wealth on paper has reached astronomical figures, but it's only on paper. The tax office can't tax asset value. It can only tax the profits when these assets are sold. Musk uses a tactic often employed by the wealthy. When Tesla stock rose to 100, he used it as collateral for a bank loan. The bank saw the value in the stock and agreed to lend him, say, 50% of the stock's value at 4% interest rate. If he used $1 million worth of stock as collateral, he could borrow up to $500,000. Remember, this $500,000 is cash, which can be spent or invested at any time. And Musk's balance sheet shows an additional $500,000 in debt. This money is not income, so it is not taxable. He only needs to pay 4% interest, while Tesla's stock might rise by 10% in a year. So Musk gets cash without paying taxes, and the value of his stocks increases even more. If Musk uses this money to buy a house, the house might appreciate in value while he lives in it. Many wealthy individuals highly praise this strategy. They own assets, the asset prices appreciate. They take out collateral loans and use the money for consumption or further investment. Robert Kiyosaki, the author of Rich Dad Poor Dad, also acquired his wealth through his debt strategy and never pays income tax. 3. Tax deductions. The third method is to maximize tax deductions. The best strategy is to hire an accountant, as one of their jobs is to help people file taxes and obtain tax deductions. If you're a sole trader, own a company, or even work as a contractor, it's as if you've opened the door to a world of tax deductions. You can deduct tax for both expected and unexpected items. I won't mention the common ones as most people know them. Instead, let's talk about some less common ones. For instance, a briefcase or a handbag used to carry your work laptop or tablet. Yes, you heard that right, a handbag. Internet fees, phone bills, apps purchased on your phone to enhance work efficiency, hats, sunglasses, shoes worn for outdoor work, bank transaction fees, utilities, rent, office supplies, electronic products, cameras, magazines, training fees, and car-related expenses when working from home. All of this can be tax deductible. However, if you're purely an employee, the only deduction you might be able to take advantage of is depreciation on an investment property. There's not much else you can do. 4. Real estate investment. Investing in real estate is the fourth method that can help you reduce taxes. Let's say you buy a property for $1 million, take out a loan for $800,000 at 6% interest rate, and earn $40,000 in rental income per year. Note that you are not making this $40,000. You still need to deduct expenses. These expenses include interest, management fees, council rates, water bills, maintenance, and insurance. Given the high interest rates, considering all these costs, you might lose money each year, say $3,000. However, the property depreciates, especially if it is a new property. The depreciation on a $1 million property in the first few years might be around $17,000 each year. When calculating your personal income tax for the year, let's say you earn $120,000. Your tax base would initially be $120,000. But with the property loss of $3,000 and the depreciation of $17,000, your tax base becomes $100,000. You've just saved $6,500 in taxes, turning your property from a $3,000 loss per year into a $3,500 gain. Not only have you paid less tax, but the property has also appreciated, resulting in actual cash savings and an increase in paper wealth. Oh, but it doesn't end there. If the property value rises from $1 million to $1.3 million a few years later, you can go to the bank and take out an 80% loan based on the market price of $1.3 million, which is $1.04 million. After repaying the original $800,000 loan, you are left with $240,000 in cash. If you don't need to use it, you can keep it in the bank to offset interest. If you find a good investment opportunity with a return rate higher than the bank interest, you can quickly take it out and continue investing, or even buy another property. Therefore, real estate investment is one of the best tools for ordinary people to reduce taxes and make money. Number 5, side hustle. The fifth method is to start a side hustle. But remember, don't take on another job because working more will only lead to more taxes, less time to improve yourself, and no potential for future growth. You should establish a company and try running a business. This way, once you have basic life expenses covered, you open up the possibility of future business growth and access to various tax deductions. For instance, you could set up an online business or start a YouTube channel. make videos, attract customers with online traffic, and sell services and products. It doesn't require much time, and anyone can do it. Number 6. Offshore tax strategies. The sixth method is to use offshore tax strategies, often referred to as offshore tax havens. Many international companies use this strategy. How much tax do you think large companies like Google and Apple pay each year? It's likely less than you think. For instance, a sports company operates in the United States but is merely a cash flow company. The money comes in and goes out, not staying in the US. The accountants are clever, deducting expenses from their income, leaving a profit of, say, $200 million a year. But coincidentally, the trademark rights used by this sports company belong to a company registered in the Cayman Islands. And the annual trademark fee just happens to be $200 million as well. Once the $200 million is transferred from the US company to the Cayman Islands company, it's tax-free because the Cayman Island is a tax haven. This is the simplest explanation of offshore tax avoidance methods. But how can ordinary people and small business owners avoid taxes? The answer is to look for developed countries that are easier to access and encourage business operations. For example, the corporate tax in Australia is 25%, while the basic corporate tax in Singapore is only 17%, with heavy discounts for the first 3 years. And there are more ways to get deductions. If the money earned is reinvested, such as in securities, there is no dividend tax or capital gain tax. As long as you're willing to do the research, you can definitely find a tax haven country and entity type that suits you. Of course, for those employees, there aren't many suitable methods for tax avoidance, except for investing in real estate and getting depreciation. Number 7. Financial education. The seventh and most important method is financial and wealth education. Why do some people drop the idea of starting a company before they even try? Why have so many people never considered using various methods to avoid taxes? Firstly, they are too lazy to step out of their comfort zone and don't want to change the status quo. Secondly, they lack confidence and believe they can't do it before they even start. To solve these two problems, the best method is to read more inspiring books, listen to wealth seminars, and follow my channel. If you made this far, please give a like, subscribe, and share this video with your friends. Turn on the notification bell to watch new weekly videos, and follow me on social media at RealCoachAlex. Hope to see you soon. Have a good one. Bye.